Welcome to Carter's Corner Pocket, where we fuel the rocket. Today, I'm talking GameStop, the heavy hitter, the stock that makes old money bitter. Hedge fund killer, retail cold as winter. Buy and hold, they act like we're sinners. In the end, there's only one winner. Can't stop, won't stop, GameStop, let's go. All right, guys, let's get into this. GameStop is rocketing. You know how it is. Since May 1st, it's up about 65%. Take a look at this. 1 month chart, 64, whatever. May 1st to now, 65%. That's incredible. This is what we've been waiting for. 30%, 20% days. That's amazing. This takes me back to January 2021. It's the exact, it feels like the exact same. I feel it in my heart, you know, heart, whatever. Let's go. All right, so we are over here. I look at the macro on the chart as usual. I buy and hold every day. I try to buy at least one, sometimes more, sometimes many more. I keep going, keep accumulating. GameStop's right now 1784, down 1% today after this huge rip out of this giant falling wedge, 3-year falling wedge. Where is this going? At a minimum, it's going right here, 50. I feel like 50 is the backbreaker. That's 200 pre-split, which is incredible. And I feel like we're definitely going there. Out of this bullish falling wedge, we're breaking up. Moving on. Let's see. CNBC, what's up? Where y'all at? I went through. GameStop's been having days, 10% days, 20% days. We've ripped, absolute ripped, 65% since May 1st. I've gone back now to May 1st. Let's see. GameStop, can't find it. GME, not there. Meme stocks? We're not a meme stock. We're a legitimate stock. We're not an imitation. Oh, the only meme stock is about Robinhood. That is all. There is nothing else. So we know you don't want to report on our bullishness, but it's all good because we're still there. You still have the problem. Your friends have the problem. We have no problem. I'm calm, cool, and collected. You could drop it 20%. I'm going to buy more. The only thing that I regret is not buying more. And I bought every single day. Every single day. And I still regret it. You know what that proves to me? I can never have enough shares. I can never be happy enough with enough shares. Let's go. On some more CNBC. Let's see. Back in the day, Jim Cramer. Today, I'm talking about Jim Cramer really quick today because of something that he put out a few days ago. But I'll lead up to that. Let's just watch.
But I do say I want to distinguish this between AMC. Adam Aaron is a magician. The numbers for the weekend were better than 2019. And what we have to start talking about, Carl, is who is besting 2019? I met Ulta today. They're besting 2019. Obviously, RH besting 2019.
40% up from 2019, right? Top line 40%.
So if you're beating 2019,
yeah,
then you are in
but you know, AMC's value, though, where it is right
I hate that I have to unmute my mic that way. Anyways, I can probably do a hotkey, which I should. If you're beating 2019 net income minus 470 million. 2023 net income 6.7 million. Profitable company. What's up? Let's get back to it.
right now.
He's got a lot of time to be able to make it up.
He does. By the way, GameStop also still has a lot of cash. Where they got
Well, they raised
$1.78 billion in cash.
They raised a fortune.
Yeah, they raised a lot of
share
money.
ATM.
Unclear how you create a growth company from a company that isn't growing. But, well, isn't growing very. I mean,
But
year over year it looks okay, but remember where we were a year ago.
It was up 1,000%. What do you think about the idea that maybe this whole revolution, now that everyone's writing books about GameStop, is done?
Really, the memification of things is going to
I don't know. They're picking stocks that you can see them with a ticker underneath.
You totally do.
You know, companies that make lightning bugs in a bottle.
Things get memified every day.
Yeah.
I mean, small companies probably not worth mentioning. $1 billion market
Well, that's the
cap.
problem. I
We
want
see
to talk about them, but they're
see
like
them roll
80,
by.
80 million.
Yeah.
Not like what you talk about with SPACs, which all anyone's buzzing about, Carl, is the idea of the vote in favor and then redeem. David, you and I think Gary Gensler from the SEC, the man often based by Coinbase, are focused on this.
We are.
First, he talks about GameStop being a share ATM, which his butt buddy Adam Aaron is. All he's done is dilute his shareholders into oblivion, diluting their float, giving them water instead of Coke. Could you imagine getting a watered down Coke and someone telling you this is Coke? Believe it, drink it. Look at his demeanor, his body composition, how he holds himself, his attitude towards GameStop. And I'm going to show you later, he hedges himself on this position, saying that GameStop this, GameStop that, they have no plan, all of that. They have no future, they're a dwindling business. You'll see it. And then he goes on to pump SPACs, the SPACs that they pump and dump on retail. This is owned by them. This is owned. CNBC is owned by them. And if they're not owned by them, hedge funds have their hands so far up their butts like puppets that they're flapping their mouths telling them what to say. On to another one. Leon Cooperman, 22 years at Goldman Sachs. 22 years at Goldman Sachs. Goldman Sachs is one of the biggest shorts. They hold the shorts of GameStop. Now let's go. He works at his family office, and if you don't know, family offices is where it's at. They're not monitored, they're protected, and they trade money back and forth to help each other out. It's not tracked, it's not monitored, it's not regulated. They trade mass sums of money without you even knowing it, the public knowing it, and it's not reported. These sums of money can shift the whole global economy if not handled correctly. And guess what they didn't handle correctly? GameStop.
This is not going to end well when it ends. And the bigger question is, when does it end? I don't think it ends soon, but I think it will end, and it will end very badly for the public. You know, whenever you go into the S&P at current multiples, the 1 year, 3 year, 5 year returns have been very pedestrian.
You've said in the past that, you know, where it was different instances. We weren't talking about the GameStop situation, that it was going to, quote unquote, end in tears. There are a lot of tears being felt throughout the business that you made your living in. And I'm curious to get your reaction to this notion of this uprising, a revolt, if you will, against the hedge fund community, the activity that took place in GameStop against some of the short funds, and just this general idea that we're sick and tired of watching hedge funds make all of this money, hedge fund managers make all of this money. Whenever they don't get money, the government bails them out. They crashed the banks, big banks crashed the system in 2008 and got bailed out, and the quote unquote little guy got left holding the bag. I mean, how do you react to that?
The big boy is holding the bag to a degree as well. Listen, in 2008, Bernanke figured out he had to rescue the economy, which was going down the toilet. And he figured out the best way to rescue the economy is to create wealth, because wealth leads to consumption. And the best way to create wealth is to get the stock market up. The trouble with that is 80% of the stock is owned by 20% of the people. Okay, and so what they did subsequently is they created a negative real return environment for savings, so you have no reward for being prudent and saving money. And that's what we're doing now. We have a new administration in place. I did vote for President Biden. I felt that I voted my values, not my pocketbook. But if you listen to what Mr. President Biden has to say, basically they're going to raise taxes on the individuals, they're going to raise taxes on corporations, they're going to raise the capital gains tax rate. It's not going to be user friendly, you know. And but I don't know if they're going after hedge funds per se. But
well, there was definitely some of that, right? I mean, there was definitely some of that, and you could see
I've
it.
been doing this for 55 years. I can tell you the short sellers, generally speaking, are more knowledgeable than the long players, because they understand if you're wrong on a long, as it goes down, it becomes less of a problem in your portfolio. If you're wrong on a short, it becomes a bigger problem in your portfolio. So they tend to be very careful. They're very smart. And if I had to guess, I've never met him in my life. I've never spoken to him. But Gabe Plotkin will have turned out to be right in his view of GameStop. And the only
Wrong. Couldn't be more wrong. Retail beat you. Look at him. Pathetic. Why waste my time on this man? I may be talking longer than this guy's living. I'm gonna move on. More Jim Cramer.
You had no need to trade in and out of positions like crazy because you don't have any investors looking over your shoulder criticizing.
Sorry, let me preface this. This is what he just put out a few days ago. No, what? 14 hours ago? Basically, he's explaining why we hold GameStop, but he's not referencing GameStop. But it's a problem when we do it.
You have no need to trade in and out of positions like crazy because you don't have any investors looking over your shoulder criticizing your every move. You can afford to find companies you believe in and stick with them as long as the facts don't fall apart on you. Now, that does require a great deal of faith in both management and the underlying business because invariably your stocks will go down and you'll want to give up on them because of the pain.
The house of pain.
But that's usually a mistake when you're not running money professionally. Stocks sell off for all kinds of reasons, and it's difficult to swap back into the good ones before they rebound. As long as the thesis hasn't changed, you must resist the desire to give up on your favorite stocks, no matter what you hear from the billionaire class and the hedge fund managers who want to cut their losses because they can't spare a spot on their portfolio sheets for what feels like a do-nothing stock. Which brings me to the most talked about stocks of the current era. NVIDIA, Apple, Amazon, and Tesla. Remember them? 4 companies with riveting stories and temperamental stocks. I like the first 3, not so much the 4th.
You mean to tell me he's talking about hedge fund managers believing in your stock after a downturn and a pop upwards, this and that? He's basically describing GameStop's whole premise and where we were at with retail investors and why we bought in. I like the stock. I'm an individual retail investor. I'm buying for myself. I'm not trying to influence anyone else to purchase the stock. But I'm sure if you look at the balance sheet of GameStop with their $1.2 billion in cash, minimal long-term debt, you'll see why. And the CEO, board of directors, and their future transformation of GameStop, technological transformation of GameStop to be the ultimate gaming destination, I'm sure you would invest too. But that's personally why I'm invested. I don't give out financial advice. I speak facts. Look at that falling wedge. It's beautiful. We've been waiting for this. Tap, tap, tap. Should have been a tap, tap, tap. Boom. Get ready to fly up. So you can see how Jim Cramer, let's get to a picture of him.
The thesis hasn't changed. You must resist the desire to give up on your favorite stocks, no matter what you hear.
Okay. All right, let's get to this picture. Okay, Jim Cramer, you see how he's hedged his position? He was against retail in the other video, and now he's for retail, telling you to stay strong, buy, hold. What are we doing? We're buying, we're holding, nonstop. Selling is not even in my vocabulary. Yesterday, my nephew asked me, if GameStop was at $1,000 a share, would you sell? I'm like, I'm holding. It's forever. I'm in deep. This is a marriage. Here comes my son. One moment. Yes. What? Okay, hold on one second. Give me a minute. I'm almost done, okay? Like, seriously, 1 minute. Okay. All right. Give me 1 second. Set a timer on Alexa. Not a second, a minute. I'll be there. Here, let's go. Let's finish this up. Daddy duty, I'm being called.
Listen up, web WSB, Reddit, meme people. They did a lot of good stuff. They've moved aggressively into e-com. They did a really good job. It's obvious that that Ryan Cohen is the savior. 29% of sales. That's up 191% for e-com. They cut the expenses. They're closing the stores that aren't working. Of course, that's called de-densifying, David. I love that new term.
De-densifying.
De-densify. Learn a new term every day.
Our comp store sales are down 9.5%. We're de-densifying. Okay.
Right. And Jenna Owens, hey, David, a pickup from Amazon and Alphabet. So everything here is positive, and I can see why people shouldn't have shorted it at $15.
Do you see how hard? That seems so difficult for him to get out of his mouth that GameStop is doing good. But you can see right here how he hedges his position. So he can, in the end, he can always say he was right. Yeah, just what a clown. I gotta go. I'm busy as hell. I got a room full of balloons over here. My daughter's first communion's tomorrow. I got a party. You see, I make shirts. I do all types of stuff. This is not my job, but I mean, I like to learn new skills and do different things. I make cakes. I do all types of stuff. I do all the decor cakes, all everything, just because I got skills. You know, I got touch. I got finesse. I can do whatever I put my mind to. I can buy and hold forever if I want to put my mind to it. Just again, the balance sheet is ridiculous. Oh, hold on one more minute, man. All right. This is one last thing I wanted to touch on. Um, I'm not saying this is definite, but I'm saying it's part of it. Whenever there's a liquidity crunch, GameStop pumps up like crazy. It pumps like crazy. Look at this. Major liquidity crunch, COVID, pump. And then all of them pump, pump, pump when banks need money. Why is that? Because they're all interconnected. It's a tangled web that they weave. Okay, this is the Bank Term Funding Program report. Look at this amount. I'm trying to speed this up. All right, let's see. This is basically for them to secure money for their depositors, so they always have money for their depositors. It's an emergency funding. I'm not reading from this. It's an emergency funding program for banks so that they have liquidity. Okay? So when they're reaching in here, it's because they need it. When they started this, none of the smaller banks were going into this, so they had the bigger banks take a few loans out to get the momentum rolling. So now the smaller banks, what are they exposed to? Commercial real estate. Commercial real estate, I'm about to explain how it's linked to GameStop. How I feel it's linked to GameStop. Look, March 12th, board authorized each of the 12 Federal Reserve banks to establish and operate the Bank Term Funding Program. The Bank Term Funding Program made funding available to eligible depository institutions to help ensure that banks and the ability to meet all needs of their depositors under the BTFP, all their depositors. Under the BTFP, each reserve bank made loans on a recourse basis to eligible depository institution borrowers for up to 1 year, receiving eligible U.S. government securities collateral in return. The BTFP ceased ending credit on March 11, 2024. So they give out 1 year loans. They give out 1 year loans, and supposedly, according to this, the last loan will be due March 11, 2025, around that time. I don't know about settlement days or any of that dealing with this, but I think GameStop's going to rock it because of this. Look at the total outstanding balance. Crap. What was that? Look at the total outstanding balance look at this. Total outstanding amount of advances under the BTFP, $130.8 billion. Total value of collateral pledged to secure outstanding advances was almost $160 billion. What do you think their collateral is? They don't want to sell their bonds at a loss to put up the collateral. So what are they going to do? They give up their real estate. Real estate is pumped to the max right now. So they give up their collateral, their commercial real estate building collateral for a loan so they can hold their bonds until they get into the money. So when commercial real estate crashes, GameStop is going to pop like crazy. That's what I believe. It's all part of it. I'm not saying it's part of it. Banks are in distress. Commercial real estate, they're keeping it teetering just above water. They will not allow it to crash, because if they allow it to crash, it's over. It's over. I'm out of here. I got to do stuff with my son. I got to get to this party. Hopefully I can get a video out Sunday. If not, I'll see you around. I'll be on Marantz's channel. Shout out Marantz, Tetron Invest, Dynamite_41, Be More Invest. They're all good people. They're all GameStop supporters. They're all real people. They're all real, like you and I. Let's see where we're at. Let's close it off. Down 2%. Great. I already bought a share today. I'll buy more. I'll post it in Marantz's Discord. Carvana down 3%. Who cares? AMC 29 cents. Peace.